what I'm trying to do in this book is explain how the various elements of the crisis fit together. Seems to me there have been 3, possibly 4 theories of what happened put forward so far. First one, which probably the man on the street subscribes to, is it was all a matter of greed. It was basically Bernie Madoffism writ large. The second theory, I think, which quite a few behavioral economists such as Bob Shiller and George Akerlof have put forward, is that this was basically an instant of the madness of crowds, that we had sort of collective irrationality, disaster myopia. People thought the housing market was going to go up forever. They sort of lost their minds, and the traders lost their minds temporarily. I saw Bob Shiller giving a speech a couple of weeks ago, and he said it's all about the stories people were telling each other. That's the second theory. Third theory, which is very common on the right, is that this was a government failure. That ultimately, it comes in various guises, mostly to do with Fannie Mae, Freddie Mac, and the Community Reinvestment Act. Basically, the government caused the problem by encouraging people to invest in subprime securities, banks to lend to people who otherwise wouldn't have got loans. Fannie Mae and Freddie Mac propping up the subprime market, etc. And as I say, quite a few people take it all the way back to the Community Reinvestment Act of '79. I don't believe in any of those theories. I think there's an element of an element of truth in each of them, but I really see this as an example of market failure writ large. What does market failure mean? It means that markets fail to act in the way they're supposed to, according to the free market theories going all the way back to Adam Smith. The basic theory of the free market is that if you add individual rationality to competition, you get a good outcome. The market aggregates people's actions and produces an overall socially beneficial outcome. That's the theory of the invisible hand. And of course, it was applied to financial markets in this case. My argument is that ultimately, this is not a failure of the government, although the government, as I'll speak about a bit later, did make some mistakes. Not just greed. Greed is a perennial on Wall Street. I mean, probably a lot of people in the audience work on Wall Street, so I don't want to be too insulting, but there is an element of self-selection. You know, if you want to make a lot of money, you go to Wall Street. So it's not surprising we find some greed there. And the third one, mass stupidity, again, I think there was some stupidity, but my argument, which I'll lay out a bit more length in a while, is that this was more to do with rational self-interest rather than irrational self-interest.